Hello traders, it's Sunday evening, July 16th, and it's time for our weekly video. We start each one of these videos with a recap of our previous pick, then we do some market analysis, and then finally I show you my new pick. This is going to be a really short video. HD, Home Depot, that was our most recent pick. And you can see how the stock continued to move higher here. Wednesday is when the video came out. I said there would be an opportunity to trade this from the long side. Take a look at that D1 chart. You can see how the stock had broken through this horizontal resistance right here. Very nice. It did finish the day on Wednesday with a bearish hammer. Okay, so this has been a herky-jerky stock. Please watch that video. I'd mentioned to you the price action tells us this stock does not make linear moves where it just keeps going higher. It has a choppy back and forth trend higher. So on a day trading basis, you needed to wait for relative strength to go below zero and then to regain itself and go back above zero. We were even using that same tactic using LRSI. So let's take a look at that 15-minute chart and then we can take a look. And here you can see that we had the orange line is below zero, which means that the stock is weak relative to the market. So Wednesday, the video comes out right about in here. You get a double top, lower high. Okay, well, the stock is probably done for the day. We know it's choppy. We know it doesn't go straight up or straight down. So the stock pulls back. This is the price action on Thursday. Thursday, it starts to bottom out a little bit. And here you can see that it's starting to barely regain its relative strength right about in here. And then by the open on Friday, about 30 minutes after the open, now the stock actually is strong relative to the market, somewhere in the $315 range. So you had some opportunities to trade it from the long side. If you followed the swing trading instructions that I gave in that video, again, please watch the video to confirm this. We needed LRSI to fall below 20, which it did, and then now it was above 20. So this is your entry point right here for a swing trade. We got another dip right here below 20. It barely ticked below it and then got right back above it. So here or here, you're in the trade. And look, you've got a nice, decent little gain, even though the market was down on Friday. So we're going to take a look at the market. Same thing with the market. 3 steps back forward, 2 steps backwards. So you have to be in the trade when it starts to run higher and it starts to show you that it has hit resistance. Double top, lower high, take your gains. You do not wait around and wait around for this to happen. You're simply taking gains, enter, take gains, wait for a dip, repeat. So the market, this is the price action on Friday. First down day that we had seen during the entire week. So let's take a look at the daily chart and start there. And we can see that the market had a nice cup and handle formation with a breakout through the lip and actually pretty decent volume. So the market was pushing higher. Now we have a red candle off of a new relative high. Typically when we see these like that one, you get some follow through selling. Get one right here, you get some follow through selling. You get one right here off a new relative high, you see a little bit of follow through selling. Get one right here, get a little bit of follow through selling. So today's pick is going to be bullish. And there are going to be people who pile right into this bullish pick. Oh my gosh, he said it's bullish, so I've got to buy. You should be expecting this for the next few days, but this is still an uptrend. This is not a market that you want to short. Look at this uptrend line right here. Very, very strong. You do not want to fade that. This is just a little bit of profit taking. 3 steps forward, 2 steps back, 3 steps forward, 2 steps back, 3 steps forward, fill in the blank. 2 steps backwards. That does not mean, gee, I'm going to go out and start shorting. because the market's going to find support, could find support tomorrow, could find support Tuesday. Whenever that happens, buyers are in here and whoosh, you're going to get the next leg higher. And if you're getting cute shorting stocks, then you're going to be focused on managing those losers instead of having your eye on the ball, which is take profits when the market hits resistance, wait for the dip, be a buyer, wait for support. Aha, we have support. Now I'm a buyer, get the leg higher, sell into strength. That is the strategy that you have to be using right now. So we can expect a little bit of weakness Monday, maybe Tuesday. Let's see if the candles are long and red and the volume is very heavy. That tells us that there's a fair amount of selling pressure, and that means that we wait patiently for that selling pressure to abate. If, on the other hand, we get some real choppy, mixed price action like this, where you get mixed overlapping green and red candles the whole way down, choppy, 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 choppy. This is not a strong downtrend because there's plenty of retracement and lots of mixed green and red candles. If this were serious selling pressure, you'd see this continue. Stacked red candles consecutively, except no overlap, heavy volume, and ka-chunk, ka-chunk, ka-chunk. You don't get any of these little bounces or reprieves because sellers are aggressive and they are hitting every bid in sight. But when you get choppy, chunky price action like this is buyers coming in and saying, I'll buy some here. I'll buy some here. I'll buy some here. I'm still engaged. So if we see the same type of choppy, stubborn, downward price action Monday and Tuesday, which I'm expecting this type of price action, then we know that there should be a bid fairly close by. We just have to wait for this little round of profit taking to run its course, and then we are looking to reload on our longs. That's the mentality that you should be in right now. Not shorting, not picking market tops in here, but looking for those dips, getting long, selling into strength, and taking your profits, which is what a lot of good traders did here. They saw that there was some resistance on Friday. Let's talk a little bit about what the signs of resistance were. That is a sign of resistance. Green candle, new 52-week high right here on this candle. This was a new 52-week high. This was a new 52-week high. Blam! Ooh, okay. That gets my attention. That's a bearish engulfing candle. All right, we get a couple more candles in, and then whoosh, we get this long candle in here, which was long and red at one time, but it finished in the middle of its range. But this big drop below the open, almost filling in most of that gap, tells me that, hey, there is some selling pressure here, and it came on heavy volume. This is a warning sign all over the place. Now, you get another high, and this turns into a bearish hammer. Now you know there's selling pressure. That candle finishes on its low, and now you get this nice long red candle finishing on its low. These are the tells that there is stiff resistance and that the market's going to be pulling back. So you have to be able to read price action. I teach a lot of this on the OneOption website. Read price action, and you'll be able to determine where the market is going to be heading. So yes, we had a little round of selling, some profit taking, very stubborn on the way down, as I pointed out to you. Look for another day or two of this. The economic news this week is very, very light. There are really no major economic releases. Earnings season, the banks kicked off earnings season on Friday. The reaction was pretty good. They rallied early, but they gave back some of those gains, so pretty neutral. The big earnings are going to start a little bit this week, but next week, that's when they really ramp up. So into mega cap tech earnings, the market bid has traditionally been very, very strong because short sellers don't want to short ahead of those major earnings announcements because the five biggest companies have been driving the market higher. So it's not until after they report earnings that you start to see a little bit of the air come out of the balloon. So I'm looking for a good, strong market bid. This was not heavy selling. This was mixed overlapping candles, some light profit taking. Expect another day or two of this, but by Wednesday morning, if the market's pulled back a nice little distance, we should get a really good bounce. So let's take a look at that daily chart one more time. I'm looking at the opening from Thursday as being support, and this doji should be support for sure. So let's take a look at the low from that candle, and it was around 445, let's say. So I'd be looking for the market to test that 444 area, maybe 445, comes down, tests this breakout right in here in the next couple of days, and intraday you should get a nice little bounce off of that low because buyers are still going to be engaged ahead of mega cap tech earnings. So let's take a look at some searches. I'm going to go into a search called buy into earnings, which incidentally, Home Depot, I still like that stock. I still like that trade. Right now on a swing basis, you'd still be long it overnight. I think the stock still moves higher, but take profits when it starts to hit resistance. Here's a stock that I like. I went into the buy into earnings search. So over the course of the last 3 years, the stocks in this search have rallied 75% of the time when they get inside of that 2 week window before their earnings announcement. So typically, you've got traders speculating that this is going to be a good number and the stock is going to move higher, at least into the number and maybe even after the number. We don't really care why that buying impetus is there. We simply know that over the course of the last 3 years, 12 quarters, more than 75% of the time, stocks in this list have had a tendency to move higher when they get inside that 2 week window. So I'm going to go down to Amazon because I really liked that chart. And we'll go into the D1. You can see this is a 15-minute chart. The stock rallied up on Friday and it pulled back and it held the gains. So it finished basically where it closed the previous day, which would seem a little bearish, but it's not because the market was down. So here's a stock that's been able to hold its own in a down market. So let's put up the D1 chart. And there we can see we've got a beautiful horizontal breakout. We can put on our trend lines and see if there are any trend lines that come into play. There are quite a few trend lines that come into play. So let's zoom out very quickly. Whoops, a little too far, and see where some of those longer term trend lines come into play. And there's one that spans all the way back to August 10th of last year. That's a nice trend line that's been broken to the upside. We've got a high plus trend line here as well. Yes, this is a pretty decent little breakout, horizontal breakout right in here. I like Amazon. I think Amazon is going to be bought into its earnings announcement. So now we just have to take a look at when we might have earnings, hover over the E727. That means we've got a little bit less than 2 weeks to work with, probably 10 days or so. I am looking to buy any kind of pullback. So the type of setup that I'd be looking for on Amazon is we suspect that we're going to get a couple of days of market pullback, a little bit of profit taking. The market's going to find support. I would like to see Amazon just come down and test this little gap that it had right in here. I'd like that support to hold, and then I'd like to see the stock have a nice, decent rally into its earnings announcement. That's how I would be playing it. How can I time something like this? How will I know? Same principle holds true as I showed you on Home Depot, where we were setting alerts based on LRSI or relative strength, relative weakness. So if I go into a 30-minute chart and I'm going to set two alerts for this, I'm going to be watching for LRSI. Now it's already below 20, so I'll be looking for it to just poke back above 20. And I can set that alert right now. I'm going to go a little bit further out in time because I'd like to see it pull back even a little bit further. I'd love to see it test this area right in here, which is about the $132 price level, somewhere in that range, and I'd like to see that support hold. So it's got a little more downside that I'd like to see to it during this current cycle here. So I'm going to go into an H1 time frame, and there you can see that LRSI is still above 80 and the stock is still strong relative to the market. So I'm going to right click and I'm going to select create alert, and I'm going to select strong versus the S&P 500, and I'd like to see this stock on an H1 basis, 1 hour basis, be strong relative to the market. I'm going to add that, but it's already strong relative to the market. So I have to mark this box because that condition has to go, it's true, it needs to go false, and then it needs to go true again. So I'm looking for this little dip here, and then this little breakout right in here. And I click save, and that alert will be set. I'm going to right click, create alert. I'm going to do the same for LRSI. And I'm going to use a 1 hour basis for that as well. And in this instance, I'd like to see the indicator go below 20, and then I'd like to see it go greater than 20. That's how the indicator is set to work. And right now it's up at 80, so it still has to get below 20. It's above 20 right now. I need it below 20 and then above 20. So I'm going to mark this little box. I'm going to click save. And when that condition is met, I'm going to get a pop-up alert. I'll be able to evaluate the stock. I'll be able to evaluate the market, and then I'll be able to decide if I'd like to take a position in it. The beauty of setting these alerts is that it doesn't cost me a nickel. When I see a super strong stock that's breaking out on heavy volume, I don't have to buy it right here, right now. Well, why wouldn't I do that? Because stocks and the market are in this choppy 3 steps forward, 2 steps backwards mode. And if you've ever rushed in and bought a breakout, if you bought that breakout on Friday and you went, oh my gosh, look at that breakout on Amazon, I gotta have some of that. Well, by the end of the day, you're going, geez Louise, I wish I would have just set those stupid alerts. I wouldn't have even had a position on right now. I'd still be waiting for the stock to find support, and then you would be able to enter. So when these alerts go off, I'm going to be watching to make sure that the market preserves that breakout and that it's ready to bounce. And if that coincides with the alerts that I have on Amazon, I'm going to be a buyer. I want to be long this stock into earnings season, into earnings on July 27th. So that's the strategy. What option strategy could you use? You can buy a call debit spread. You can sell an out of the money near term put credit spread. The only thing is we want to be out by that earnings announcement because we don't hold over earnings. So whatever strategy you plan on using, you can buy the stock if you want to. You can buy deep in the money calls that are trading just over parity. I'd like to be long this stock. The market has a decent tailwind. I like this market breakout. We got mega tech earnings coming up. This is a nice market trend. You just have to buy dips. That's the key. And you have to be ready to take profits when the market hits resistance. If you can stay in that mindset, you're going to be in a really great position to benefit from the market move higher in the course of the next 3 weeks or so. I think as we get into the middle of August, maybe the back half of August, then things get a little bit more dicey for a number of reasons, seasonality being one of them. Not going to get into that right now, but for the next 3 weeks or so, I would stay in that buy the dip mode and take profits when the market and the stock are surging higher. Thanks so much for watching. Please leave your comments. I promise I'll respond to them all. I'll do another video on Wednesday. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.